You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. Well, it's been 1 week since I did my last podcast. And when I did my last podcast, it was also on a Wednesday. And what prompted me to do it that day was the fact that it was the first day that gold broke 4,000. And there was a lot of media attention. Of course, they missed the bigger picture as to why gold was at 4,000 and what it portended. But they did cover it. You know, media had pretty much ignored gold all the way up to 4,000. But when it got there, all of a sudden, it was a bit of a story. And now it's kind of slipped, back on, the back burner again. But here we are a week later, and gold is now over 4,200. So gold has added $200 in 1 week. Silver closed today above $53. Remember, $50 was resistance. It was a big double top. And what was I saying on this podcast? I thought that we would blow through that double top and that 50 would become resistance, which is now the case. And in fact, if you get a chance to buy silver anywhere near 50, do it. But again, I got no problem buying it at 53. I said the same thing when silver broke above 30. I said 30 is the floor. So if you have to pay 32 or 33, what's the big deal? You don't have a lot of downside risk. So even though silver might pull back to 50 and a half or maybe 49 and a half, so what? Buy it now. It's not that much downside. And it may never pull back. We may never see sub 50 silver again. Now, maybe we will. I don't know. We're only $3 above it. But we may be at 60 before we're back at 50. Look at the momentum. In fact, if gold continues to rise $200 a week, we'll be at 5,000 a week before Thanksgiving. And if we keep rising by $200 a week, which percentage-wise would be a smaller percentage if we're at 5,000 than 4,000. But if we keep going up at 200 a week, gold will be at 6,000 before Christmas. Now, I don't expect gold to be at 6,000 before Christmas because there's got to be pullbacks at some point, although maybe not. Who knows? But it's clear that gold is going up. I mean, year-to-date, gold is now up 60%. Silver is up 84% in 2025. We still got 2.5 months left of the year. We have not had a year like this in precious metals since the 1970s. And that's not a coincidence that what's happening now hasn't happened since the 1970s, because we are living through a similar economic period. It's not just that we got stagflation, which we had in the 1970s, and we're going to get a lot more of that in the 2020s. But again, 1971, we kicked off that decade going off the gold standard. That's what set all this in motion. That resulted in a major dollar depreciation. And gold went way up during the 1970s. Well, something is happening now that is just as significant and maybe more. So back then, we went off the gold standard. So we told the world, hey, we're still on the dollar standard. We're just going to not back it by gold anymore. So we're going to renege on our commitment. we're not going to give you gold for your dollars. You could just hold on to your dollars. And the world basically did just that. The world stayed on the dollar standard, despite the fact that we, pulled the rug out from under them in that we reneged on our promise to pay gold for their paper. But they continued to, keep the dollar as the reserve. Now, they marked the dollar down. The dollar lost 2/3 of its value against other currencies, but they still held it as their primary reserve asset. What's happening now, over 50 years later, is now the world is taking action. They're pulling the rug out from under us. They are now moving off the dollar standard. And this probably has even bigger implications for us than going off the gold standard did, either for them or us, because our entire economy, our entire way of life over that time period has evolved to become dependent on the dollar's reserve status, dollars that we can create out of thin air. Not that we have to back by gold or anything. We just conjure them into existence, and we use those dollars to buy consumer goods that we don't produce. So we get to live beyond our means. And then the world is in a relationship where they loan us back the dollars they earned, selling us stuff that we didn't make at low interest rates. So now we can go into debt and buy more stuff, and we can buy assets, and the stock market goes up and the real estate goes up. But our whole phony economy is completely built on the foundation of the dollar's reserve status, and that's the rug pull. That's what's happening. That's why gold is doing this. Right? It's not just a random coincidence. And of course, the significance is being lost on just about everybody when I hear the discussions on gold. But probably one of the most significant admissions that I've heard was from Jamie Dimon, who is a highly respected guy. And Jamie Dimon was quoted as saying, gold can easily go to 10,000. Easily. And I agree. It can easily go to 10,000, and it very well will go to 10,000 and a lot higher than that. But here is the more significant aspect of the Jamie Dimon quote. Jamie Dimon said, quote, "This is one of the few times in my life it's semi-rational to have some gold in your portfolio." This is one of the few times in his life. I mean, he's my age, I think. He's been around for a long time. But he's saying in his entire life, this is one of the few times that it's semi-rational, like not completely rational, but at least there's a modicum of rationality where you might want to have some of your portfolio in gold. Now, first of all, clearly, if gold is above 4,200 and 20 years ago, 25 years ago, it was below 300, and that was certainly within Jamie Dimon's lifetime. It was within his career, not just his lifetime. But obviously, if gold has gone from 250 to 4,000, that means it's always been rational to have gold in your portfolio. Not just semi-rational, 100% rational. Gold has outperformed the S&P 500 since then. So if it was rational to hold stocks, it was certainly rational to hold gold. The significance is that even though it was rational to hold gold 20 years ago, 10 years ago, 5 years ago, Jamie Dimon didn't realize it. See, what he's actually saying is not that this is the first time that it's rational to hold gold. This is just the first time that he understands the rationality. You see, up until recently, it was just guys like me. I would come out and I would try to explain to people when gold was 300, 500, 800, 1,000, 1,200, 1,500, 2,000, why they needed to own it. And people didn't see the rationale, right? They thought I was nuts. They thought I was crazy because I was worried about the dollar. I was worried about the deficits, the budget deficits, the trade deficits, all of the things that Jamie Dimon is now finally worried about. Finally, with $4,000 gold, the problems that I was worried about at $400 gold suddenly concern Jamie Dimon. Now, the truth of the matter is, they were a problem back then. The difference is it's a much bigger problem now. And the more significant difference in that is, had people like Jamie Dimon recognized the problem that I recognized 20 years ago, maybe we could have done something about it. Maybe we could have diffused this bomb before it went off. But because we waited as long as we have, there's nothing to do. I mean, it's going off no matter what. It's impossible to diffuse it. And so we're going to have this massive crisis that I have always been concerned about. I've always been warning about it. But it is very significant that now you have a major Wall Street figure acknowledging that, yep, I guess it makes sense. It's not completely nuts, right, to buy some gold. In other words, he's also validating the fact that I was recommending it, because if it makes sense to buy gold at 4,000, then was it nuts to buy it at 400? Was it nuts to buy it at 1,000? Obviously not, because if you're going to buy it now and you're not crazy, then you weren't crazy to buy it then, right? Now, everybody thought I was crazy, right? But I knew I was the sane one, right? In an insane world, right, it's the sane man that looks crazy. Everybody else was irrational. My view on gold was the rational one. It just wasn't understood by enough people. And the problem is, the people who are now gradually waking up to the realities that I have known about and warned about for pretty much my entire career, right? They still don't get it. They still don't understand really the severity of what's going to happen. But at least they recognize now that, yes, there is a problem. I hear people talk about the dollar debasement trade, right? Well, yeah, I've been in the dollar debasement trade for decades because I knew the dollar was going to be debased. In fact, it was being debased. It's continuing to be debased, and it's going to be debased at an even faster pace in the future than it has been in the past. But the point is that now more people are coming in to buy gold. What is that going to do to the price of gold? What is that going to do to the price of silver? Clearly, they're going to keep rising. And, you know, the interesting thing about the rise, so I did the podcast a week ago, and there was one day last week, I think it was maybe on Thursday, but we had a $2 drop in silver on the way to 53. There was silver initially jumped above, maybe it was 52, and then it sold all the way back down to 49.5, like in the same day. So there was an intraday shakeout. But the problem was, if you blinked, you missed it. There was so much money waiting to buy that dip that before you knew it, we were at new highs. And I saw the same action in the mining stocks, which of course were on fire today. The gold and silver stocks, most of them hitting new record highs or 52-week highs. The GDX was up GDXJ was up about 5% today. GDX, I haven't even calculated the gains on the year. I don't know, 140% or whatever it is. But a lot of these stocks are double, triple, quadruple what they were in March, right after Liberation Day, right? That's when they all bottomed out. And, so starting from, March, April is when the whole rally in the stocks began. Even though the gold rally began earlier, the stocks initially, went down before they moved up. But a couple of times when they knocked gold and silver down, the mining stocks gapped down quite a bit, 2%, 3%, 4%, but they opened on the lows because the minute they gapped down, the buying rushed in, right? I haven't seen buying like this during the entirety of this bull market. I've been buying these gold stocks now for 20 years. I've never seen so much buying on an opening gap down. It's almost like it's orchestrated. Like they hit the futures to drive down gold and silver prices just to gap down the mining stocks so they can swoop in and gobble them up, right? And that's what's going on. It is incredible strength as money is trying to move into the sector for the first time. Because again, if Jamie Dimon can now see the rationality of buying gold, whereas he never saw it before, he's not alone. And now you have a lot of other people on Wall Street who, for the first time, see that it makes sense to own gold and they want to buy some. This is a game changer. And again, it's a bigger game changer for the mining stocks because what has kept these valuations so low is when the Wall Street analysts look at a gold company and they try to make a recommendation as to whether or not people should buy the stock, they try to assess the future earnings of the gold mining company. And what they've always done, regardless of the current price of gold, the assumption is the price of gold is much lower in the future because they have no idea why it's up and they assume it's just a mania and that gold's going to go down. And so that impacts their valuation of the companies because it means the earnings are going to go down, not up. But if Wall Street now recognizes that $4,000 gold is not just here to stay, but that in the future it's going to be $5,000 gold or $10,000 gold, right? You have to totally redo your valuation on these gold mining companies because now you have to factor in much higher earnings in the future and now discount those to the present. So there is going to be a wave of money that's going to discover the value in these gold mining stocks. And as money exits, the AI trade or the crypto trade, where's it going to go? I mean, where can you get the kind of momentum that you've got in gold stocks now? Nowhere. Plus, the gold companies are earning a ton of money. It's not just pie in the sky. Well, maybe they're going to make money in the future. They are making a ton of money right now. And they're going to make even more in the future than they're making right now. And it's pretty much a certainty. It's not just, betting on the come. So it's about the safest momentum growth stock investment that I think anybody can possibly make. So a lot of money is going to be coming in to this sector, which is why, again, I've been pounding the table. You got to buy these stocks. You remember in April, I came out with my special report, the best way to buy gold, which was don't buy gold above ground, buy it in the ground because of how cheap these mining stocks were. They were the cheapest I had ever seen them. Now, yes, they're not as cheap as they were, but they're still cheap, especially considering how much higher the price of gold is. And in fact, even though a lot of these stocks have doubled and tripled, I think when we get their earnings, and we're going to start to see Q3 earnings later this month, I think the earnings are going to go up more than the stock price. And wait till we get Q4 earnings. Because, and then next year, Q1, the earnings are going to keep going up and up and up. And so it's going to suck in capital from all over the world. Right now, you've got these central banks that are buying gold. But now it's not just the central banks, it's investors. But they're not done buying. They're just getting started. And in the scheme of things, so are the central banks. They have a lot more gold to buy than they've already bought. So the price has got nowhere to go but up. I got a quick commercial break. Stick around. I got a lot more to talk about. So we'll be right back. Building a legacy takes risk, sacrifice, and a lot of long days. But protecting that legacy shouldn't be a gamble. Here's something surprising. 72% of Americans overestimate the cost of life insurance. That misunderstanding leaves too many people unprotected. Now, I talk a lot about protecting your wealth, but protecting your family starts with making sure they're covered if something happens to you. That's where Policy Genius comes in. Policy Genius isn't an insurance company. It's a marketplace, one that makes it simple to compare policies from America's top insurers and find coverage that fits your needs and your budget. They lay out all your options clearly, the coverage amounts, prices, prices, terms. There's no guesswork, just clarity. You can even talk to licensed agents who walk you through the process and handle the paperwork for you. See if Policy Genius can help you find 20-year life insurance policies starting at just $276 a year for $1 million in coverage. Life insurance is a form of financial planning, and Policy Genius is the country's top online marketplace for getting it done. They've earned thousands of 5-star reviews on Google and Trustpilot from people who found the right policy at the right price. Business is about risk, but your family's future doesn't have to be one of them. Go to policygenius.com/gold to compare life insurance policies, understand your options, and make a move that supports your long game. That's policygenius.com/gold. All right. I'm doing this podcast, Wednesday? It's about 8:30 here in New York. So Asian trading, it's still early on. Gold is already up another 1750, new record high territory. It's trading at 4,225. And silver's up another 16 cents. It's at 53 and a quarter, right? New records, every day a new record. This is a train that can't be stopped. All you could do is hop on board. So again, if you haven't bought any gold or silver, buy it right now. Don't even finish this podcast. Put it on pause. It ain't going anywhere. Go to Schiff Gold, buy your gold and silver, and then come back and watch the rest of it. Because if you wait till the end of the podcast and go back, it's going to be even more expensive. Right? So you have to recognize this is a real gold rush. What is happening is what I've been predicting would happen for years, and now it's happening. Most people don't understand what it means because they weren't predicting it. It is happening for the precise reasons that I said it was going to happen. And it's also going to result in a crisis, a dollar crisis, and a sovereign debt crisis. Again, this is just like 2007 with the blow-up of subprime. I was predicting that for years. I knew it would happen, and I knew why it was going to happen, and I knew what the consequences were. That's how I knew when it happened that a financial crisis was around the corner. But the mainstream media, the Fed, Ben Bernanke, subprime is contained, they didn't know what happened because they weren't on the lookout for it. I knew what was happening because I expected it. It happened just the way I thought, and we had the 2008 crisis the way I scripted it. Well, that's what's going on now. And, the problem is when you live in a bubble, you don't see the pin. Gold is the pin. It has pricked the bubble, right? The U.S. dollar bubble and the U.S. credit bubble, the whole global system of the U.S. dollar reserve and dollar hegemony is going down the drain. That's what gold is saying. And yes, I mentioned, Larry Kudlow dismissed it. Hey, we don't have to worry about it because the dollar's not going down. The bond market isn't going down. They will be. By the time they're going down, it's absolutely too late to do anything about it. Right? The same way they were dismissive of subprime because they said, hey, it's only subprime. Now they're saying, oh, it's only gold or it's only silver or precious metal. So we don't have to worry, right? Gold is just going up, but nothing else bad is happening. Yes, gold going up like this is telling you these other bad things are going to happen. And they're going to happen suddenly when they do, right? The dollar is going to fall through the floor. And it's going to take the bond market with it. And, we got the beige book today, and the Federal Reserve has basically officially now ended quantitative tightening, which is something I said they would do. They still have a massive balance sheet, but this is just the first step to launch quantitative easing. It is coming. I thought it would have happened already. They managed to avoid it, but it's coming, and it's going to be bigger than ever. It'll probably start by next year sometime, maybe even by the end of this year, because it depends on when the bottom drops out of the bond market. It's going to happen any day, right? I mean, we don't know, but it's going to happen. Gold's going to keep on going up until the dollar breaks, until the bond market breaks. But before that happens, right, you do something to protect yourself. And one of the things you could do is just buy some gold and silver. Now, we had another, a significant interview. I was listening to our Treasury Secretary, Scott Bessent, and he was interviewed. He was at some Invest in America conference, which, of course, misses the whole point that it's divest from America that's actually going on. My international dividend payers strategy now is up almost 50% on the year. And that's because of the money that's now being sucked out of the U.S. And there's a lot more left to come out of the U.S. and that's being reinvested internationally. But Scott Bessent is there at this Invest America event, and he was interviewed on CNBC. And one of the questions that he was asked was about gold. Why was it going up, and was he worried about it? And his answer first was, when she asked him, why is gold going up? He said, well, more buyers than sellers. Very simple answer, right? Didn't want to talk about why there are so many buyers, just the fact that, well, there's buyers and there's not enough sellers, so the price is going up. But she asked him if he was concerned that gold going up was a warning, that it somehow reflected a loss of confidence in the U.S. economy and the dollar. And his answer was absolutely not. Now, of course, even if he recognizes it, the last thing he wants to do is admit it. He just wants to put a positive spin on everything. But he just came out with a BS answer, and he said, no, everything is great. He says, our bond market is great. Our interest rates are down. The dollar is not down that much. He kind of refuted the idea that the dollar is falling because it has stabilized a bit over the last few months. But again, that's just temporary. But he had no worries whatsoever about the price of gold, completely ignoring it. Again, just like Ben Bernanke claimed not to worry about the subprime market. Now, again, I saw an interview, and I wish I could find it online. I've looked for it. But there was an interview with the Motley Fool where they interviewed Ben Bernanke. And this is when he's no longer Fed chairman. And in the interview, they played clips of him downplaying the significance of the subprime problem. He was saying, subprime is contained, the economy is strong, housing is strong. And so they played these clips, and they asked him, well, how do you feel, listening to this? Because you were clearly so wrong, how do you feel now knowing how wrong you were? And you might have expected him to say, yeah, I really got it wrong. I missed it completely, right? I don't know why, I guess I'm not as smart as everybody thinks I am, right? You would expect some contrition or maybe some excuse that, well, everybody else got it wrong. I hear that all the time. Nobody could have predicted this. Nobody, saw it coming. Like, what am I, chopped liver? I not only saw it coming, I wrote a whole book about it, right? It was so obvious that it was coming. But no, that's not what Ben Bernanke said. He said, and I'm not making this up. He said, well, to be honest, I really couldn't speak my mind back then because I was part of the Bush administration. And so I had to maintain the narrative that the administration, was advancing, which, I couldn't believe that he said this. And I also couldn't believe that nobody picked up on it. So basically, Ben Bernanke's excuse for why he was so wrong wasn't that he got it wrong and that he wasn't smart. It was that he lied. He basically said, look, yeah, I knew it was pretty bad, but I couldn't say that. I couldn't fess up and tell the truth because George Bush wouldn't have liked it, right? I was part of the Bush team, and he was talking about how great the economy was, how strong the economy was, and so I didn't want to undercut him. I didn't want to tell the public the truth about how bad things were because it wouldn't have reflected well on Bush, and so I lied. Well, first of all, he was not a member of the Bush administration. He was the chairman of the Fed. He was completely independent. But that was an admission that Fed independence was a pretense. Because you know what? He was acting like he was a member of the Bush administration. That's what these Fed governors do. They always act as if they're working for the president because that's who reappoints them, you know. But now it's even worse because now, you know, they don't even pretend, you know, that they're independent. I mean, Trump is clearly calling the shots now and influencing what the Federal Reserve is doing. But another thing that Scott Bessent said was that he praised Alan Greenspan. He called him the maestro. And he said he was a great Fed chairman because he kept interest rates low and he wasn't concerned about inflation. He knew that there was productivity gains, and so he resisted the temptation to raise rates. He kept them low, and that's why we had this good economy under Greenspan, was because he kept rates low, basically saying that we need more of that now. We need central bankers not to worry about inflation, but to keep interest rates low. Completely missing the point that the reason we had a housing bubble and a financial crisis was because Alan Greenspan did exactly what he's now praising him for having done. He kept interest rates too low for too long and inflated a housing bubble that when it popped, we had the 2008 financial crisis. He doesn't get that, or he's lying about that. But interestingly enough, you know, if he's going to praise the architect, really, of the 2008 financial crisis, and he thinks Alan Greenspan is a great Fed chair, right? He told this reporter that he's not concerned about $4,000 gold. Irrelevant to him. Nothing to see there, right? Alan Greenspan, one of the things that he said as Fed chairman in congressional testimony when he was asked about going back to a gold standard, because he was known for his advocacy of a gold standard. You know, he was an Ayn Rand disciple. He wrote a piece called Gold and Economic Freedom. And, you know, Ron Paul once told me that he asked Alan Greenspan personally while he was Fed chairman, hey, if you had, you know, now that, you know, all this time has gone by and now that you're Fed chairman, you know, if you had to go back and rewrite that essay on gold and economic freedom, what would you change? And Alan Greenspan told Ron Paul, I wouldn't change a word. In other words, he still believed as Fed chairman everything he wrote long before he got that job, right? And so he was an advocate for the gold standard. So when he was asked in these, you know, biannual, you know, congressional testimony, he was asked, should we go back on a gold standard? Do you support going back on a gold standard? His answer was, well, we don't really have to because we're on one anyway, kind of de facto, because he admitted that as Fed chairman, he used gold as a key barometer of whether or not he had the right interest rates. So he said that if gold was up at 400, that was an indication that interest rates were too low. If gold was down at 300, that meant interest rates were too high. So in other words, at the time, gold was around 350. And he was kind of trying to keep gold price stable around 350. And so if he saw the price rising up to 400, that would be a market-based signal that he's too loose and he needs to tighten up. On the other side, if he saw the price of gold falling and getting down to 300, then that would be a sign that he's too tight and he needs to ease up. So he said, look, we're still using gold. We're not officially on a gold standard, but gold is still providing discipline because it's helping to keep interest rates to reflect a real rate of inflation, because gold is very sensitive to inflation, much more so than just the CPI. So if we want to maintain price stability, we need to maintain gold price stability. And this is what Alan Greenspan said. So if you're going to praise Alan Greenspan, you can't just selectively praise him. You can't ignore what he said about gold. So what would Alan Greenspan say today in the face of $4,000 gold, right? He wouldn't dismiss it the way Scott Bessent is dismissing it. He would say $4,000 gold means monetary policy is much too loose, because Alan Greenspan said $400 gold meant he was too loose. Well, what does $4,000 gold mean? It's 10 times as high. Gold is screaming the Fed is too loose. Yet the Fed is about to cut rates again, ignoring the warning that rates are too low and need to be higher. The Fed is going to lower them again. And so the price of gold is just going to keep on rising, and the pace of the rise is more likely to accelerate. It's not going to slow down. It's going to speed up, which is why you have to buy it now, which is why you have to load up on these gold stocks. Especially, look, you've got a gift to buy my gold fund, the Euro Pacific Gold Fund, EPGIX. About a third of the fund is small companies, very small exploration companies that haven't moved nearly as much as the big companies. But we think that those companies actually have the most potential and will move the most. They're just going to move last. Now, maybe that'll start next week. Maybe it'll start next month. I don't know. But for now, you've got an opportunity to get into the fund and acquire part of that portfolio. Yes, we own the best quality big names and the mid caps and the royalty companies, which have been underperforming recently as money has been moving to the more speculative side of the gold trade, out of the royalty companies into the producers. The next one is going to be to the juniors in the exploration. So before those things really explode, you got to go and you got to buy my gold fund. Now, obviously, a gold fund is a different animal than gold. It's riskier, but there's a lot more upside potential in the stocks than there is in the metal. Now, there's a lot of upside in the metal. There's even more in the stocks. So, you could buy my funds directly on our website at Europac.com. You could buy at no load in any discount brokerage firm. EPGIX is the symbol. You can read the prospectus, understand the risk, right? Invest money that you can afford to lose. But, again, as I've been saying, the payoff is asymmetric to the risk, right? These stocks can go up 10 times, 20 times. The worst case is they go to zero. But in a diversified portfolio, there's no way it's going to zero. So let's say somebody invests, 10 grand. Worst case scenario, they lose 7-8 grand. I mean, that would be a complete disaster, but you don't lose everything. But best case, your 10 grand becomes 100 grand, 200 grand. So if you compare the $7,000 or $8,000 you can lose versus the $200,000 or $100,000 that you could gain, right? You want to make that bet, right? You have an opportunity for this asymmetric a bet where you make so much if you're right and lose so little if you're wrong. You got to do that every time. Now, I mean, if you absolutely positively can't afford to lose any money, well, then I guess you can't do the trade. But there's an amount of money that everybody can risk. And so figure out what your risk tolerance is and then make the investment. And it's not just wild, random chance. It's not like I'm telling people, hey, put your money on black and spin the wheel or pick a number, right? Bet 32. There is a logic behind this. This is not just random guesswork. It makes sense that gold is going to go way up. And then it makes more sense that these mining stocks will go up even more. So we are making investments. We're not just making random speculations like the roll of a dice. Now, that doesn't mean that the outcome is 100% certain, but it's a lot better than just raw gambling. I'm not just throwing darts, right? There's a method to this. Anyway, one other thing that Bessent talked about was China. And I've been hearing a lot of stuff from the Trump administration about how China's economy is imploding, how China is losing the trade war, that, they're hurting themselves more than they could hurt us. This is all a bunch of BS. In fact, we got data earlier this week. I think it was Monday, or was it yesterday? But import-export data out of China. And imports and exports are up big, 7-8% or so year over year, right? So Chinese trade is not contracting, it is expanding. Now, trade with America has gone down a lot, but overall trade has gone up. So what does that mean? That means China is trading more with other nations as it's trading less with America. And that's good for China because the nations that it's trading with can actually afford to buy their stuff. And when I talk about affording it, I don't mean can print money. I mean they have products. The reason that you export is to import. That's what comparative advantage is about, right? A nation will produce an excess of what it can produce efficiently. And then it will trade the excess with other countries to import what they produce more efficiently than they do. And that way everybody wins, right? Everybody specializes in certain things and then trades. And everybody wins. Everybody ends up with more stuff because of trade. But what China's been doing is they've been trading with us where it's a one-way street. They send us products and we just print up some money and give them that because we don't have the factories to produce the stuff that the Chinese want. But you know what? There are a lot of other people in other countries that produce stuff that the Chinese could use, a lot more than our treasury debt. And so they're trading more with those countries. In fact, there was a huge increase in trade between China and Africa, right? So apparently, hey, they found some stuff that they could use in Africa. And so they're trading more with Africa. But all of this is good for China. They need us like a hole in the head. They've been vendor financing us, right? The best thing we could do for China is, end this relationship, which is really parasitic, where we've been the parasite and they've been the host and we've been feeding off of them. And a lot of people, including the president, just don't understand the nature of this relationship. The idea that, the world's been taking advantage of us when we've been taking advantage of them. We've been riding on a global gravy train, and that ride is coming to an end. And that's what that trade data is showing you. In fact, look what happened. Spain didn't want to increase their military spending by the amount that Trump wanted. So he got really mad and he says, well, we're going to have to put tariffs on them if they're not going to, spend more money on the military. Yeah, you know what? Fine. They're better off. Fine. Put the tariffs because the tariffs are not on Spain. The tariffs are on us. And, one way to show that, I posted this on X, but, my wife had bought me a pair of shorts, a couple of pairs of shorts. And I ended up really liking them. I thought they were very comfortable. They fit nice. I enjoyed wearing these shorts. Not that I got plenty of shorts. I live here in Puerto Rico, so I'm not in desperate need of more short pants. But I liked these particular shorts. And so I asked my wife, hey, get me a few more. Get me some different colors, right? I got white and I got like tan. But give me a few more colors of these shorts. So she tried to buy them and they won't ship them because the company that makes these shorts is in France. And they just said, look, we're just not shipping anything to the U.S. It's too big a hassle with the tariffs. So even though I'm willing to pay the tariffs, they won't even ship it. But that proves it's not like they're eating the tariffs. Oh, don't worry. Sure. We want so desperately to sell you these shorts that we're going to pay the tariffs. No, they got plenty of other customers who can buy these shorts. They don't need our business, right? Nobody needs it because they have to vendor finance us, right? The key is producers. If you can produce it, you can consume it. If you can't produce it, then you can't consume it. We are the weaker position, right? We're overplayed our hand, right? That's Trump. Trump keeps thinking that China doesn't have the cards. We don't have the cards. We're bluffing. We've got nothing, and we're going to find out that we got nothing. Now, one other thing too I wanted to talk about that's going on is what's happening with Bitcoin. Because the people in crypto, I think, have already lost a ton of money. They just don't know it yet. Gold is not just pricking the dollar bubble. It's pricking the Bitcoin bubble. The whole false narrative that Bitcoin is digital gold is being destroyed right now. It's being exposed as a fraud. Bitcoin is in a major bear market. It is down by more than 25%. I haven't done the calculations today. Maybe it's down 26, 27%, priced in gold since August. This is a massive decline. And the trade is obviously dollar debasement, and Bitcoin is not participating in that trade. And Bitcoin is down way more than tech stocks, which recently made new highs. Now, obviously not priced in gold. They didn't make new highs. But Bitcoin is weakening, and it's not a tech stock, even though it's highly correlated to tech stocks, because it will never have any earnings. So even tech stocks now that may be losing money, at least there's the potential that they may make money in the future. And that's, of course, why you're buying these companies that are losing money now, because you're betting that they'll make money in the future that will, offset today's losses. But Bitcoin will never make money in the future. It doesn't make money now, and it won't make money then because it is impossible. It just sits there. It doesn't generate any kind of income. Now, you could say, well, the same with gold. Yes, gold just sits there storing the value of the precious metal. Gold has a lot of uses. Bitcoin has none, right? Yes, you can give it to somebody else. I get that. I don't count that as a use that is completely separate from the fact that you can exchange it. Yes, I can exchange my gold, but ultimately somebody could use the gold for something real, right? But again, I don't want to make this podcast about exposing the flaws of Bitcoin. I've done that before. The purpose of my bringing it up is that the price is going down, and I think the risk of a complete collapse in Bitcoin has never been greater. Now, we had kind of a dress rehearsal on Friday, right? Donald Trump came out and said, I'm going to have 100% tariffs on China, 100%, as in addition to the 30 or 40% tariffs that are already there. Now, he had already teased earlier in the day that I don't like the way the Chinese are dealing with us on critical minerals. They have some export controls. They're not playing nice. I'm going to get tough on China. We're going to have some really big tariffs that are going to come out. So he talked about that. And then about a half hour after the stock market closed, maybe 15 minutes, he puts out a post on Truth Social, 100% tariffs on China. Now, as soon as he does that, Bitcoin crashes. Now, it went down to like 104,000. I mean, different on a different exchange. It went down a lot more. And the altcoins got obliterated. And there was massive margin calls and liquidations. Some people lost everything, depending on how levered they were. Now, of course, I did a podcast on Friday on the Schiff Gold YouTube channel where I discussed this. And I said on Friday, we'll see what happens, because I expected that Trump would chicken out, the taco would strike again, and he would come out and reverse course. And sure enough, on Sunday, it started with Scott Bessent, who went on the Sunday morning talk shows. Or not Scott Bessent, Vice President J.D. Vance, basically went on the talk shows and said, oh, look, the deadline is November 1st. We're not hoping that we're going to actually impose these tariffs. It's more of a negotiating tactic, which, of course, you don't say that. I mean, how can you negotiate if you tell the other party that it's all a bluff, right? Because if you're saying, look, we don't really want these tariffs, they're just a negotiating tactic, you've blown whatever negotiating leverage you thought you had, because you've told the counterparty that you don't want the tariffs either. Okay, fine. No, so if Trump was really serious, he would have imposed the tariffs right then and there. He wouldn't have had some arbitrary deadline that he can cancel. But once the market started to tank, people went to the president and said, hey, you got to backtrack. And in fact, later on in the day, he put out on Truth Social, don't worry about China. Everything's going to be fine. I love China. I love Xi. He's such a wonderful leader. I've got respect for him. We're buddies, right? I mean, basically, he's kissing his ass, right? Trying to, backtrack on what he said. Now, look, I am sure that a lot of people close to Donald Trump got short crypto and who knows what else before that initial Truth Social post. and they reversed and they went long. And I mean, people are cleaning up, front running these truth social posts that they all know are going to move the market, right? Obviously. So I think there's massive market manipulation that's going on. But of course, nobody's going to investigate it because Trump controls the people who would be investigating it. But the point is, and what I really wanted to make is that Bitcoin and other cryptos collapsed based on this post because of lack of liquidity. It shows you that there's not a lot of depth in these markets. What I think is going to happen next is the real crash, not, just a flash crash that gets reversed. I think that a lot of the hot money, and I'm not talking about the diehard Bitcoin maxis. I mean, yeah, you guys will go down with this ship. I know that, right? You guys are true believers, and nothing is going to, turn you from your Bitcoin, right? So you guys are there. But I would say that the majority of money that has entered Bitcoin over the last 2 or 3 years are not the diehards. They got in a long time ago. It's mainstream investors who bought Bitcoin through the ETFs. They didn't open up their own wallet. They bought it in their brokerage account, just where they have all their other stocks. And their goal was a profit. They bought Bitcoin ETFs and then Bitcoin treasury companies or MicroStrategy. They bought these things because they believed that the price would go up because there was so much hype. There was so much FOMO. You got to buy these. The financial media was shoving these things down your throat. And then, of course, when Trump was elected president, now they had the government pumping it up. And everybody was saying, you got to buy Bitcoin because Trump is going to make America the Bitcoin capital of the world. They're going to have a strategic reserve. Idiot, buy Bitcoin now. How could you lose? It's a can't lose. And in fact, the most consensus trade out there, I think, is that you can't lose buying Bitcoin. How can you lose? There's only 21 million of them, and everybody's going to buy them. All these governments are going to be racing to buy them. It's an arms race for Bitcoin. There's not that many there. I mean, it's going to 1 million. It's going to 10 million. I mean, just ask Michael Saylor. He'll tell you it's a lock. Mortgage your house, buy Bitcoin, right? So a lot of speculative money bought into this nonsense and got into Bitcoin ETFs. Where did they get the money? A lot of the money, and I mentioned it on this podcast, a lot of the money that went into Bitcoin ETFs came out of gold ETFs, came out of gold stock ETFs. There were huge outflows all last year and most of this year. The money went into Bitcoin related investments. Now, had they left it in their gold investments, they would be better off. In fact, had MicroStrategy, had Michael Saylor, had he just bought gold or silver every time he bought Bitcoin, he would have a bigger profit now than he has on Bitcoin. And the bigger difference is he can actually sell his gold and cash out with the profit. There's no way he could sell his Bitcoin. If he tried, all the profits would be gone and he'd be cashing out with big losses. But my point is, gold is going up every day. Gold stocks are going up. I think the people who sold their gold and sold their gold stocks and moved into crypto are going to want to reverse those trades. It's kind of like you're in traffic and you're in one lane and the lane next to you is moving and moving and moving. And you sit there for a while and you're hoping that your lane moves and it doesn't move. And you keep watching the other lane. And then eventually, okay, I'm going to switch lanes. And then you get into that lane. And then the lane that you left starts to move. And now the lane that you moved into is now stuck in traffic. And you're like, crap, I got to get back into the other lane. Well, that's what happened. People were in the slow lane for gold because gold went nowhere for over 10 years, right? When Bitcoin came on the scene, right, gold was going sideways. It was in a consolidation. And a lot of people were frustrated because gold wasn't moving. They were stuck in traffic. But then they looked over to the Bitcoin lane and it was zooming along. And Bitcoin was going up, going up, going up, and gold was nowhere. And in fact, that was the big selling point. hey, look how much money you would have made if you had just bought Bitcoin. You're not making anything in gold. You got to buy Bitcoin. And so some people, after waiting in the gold lane for years for gold to speed up, and it never did, they switched over to Bitcoin. Well, now they're in the Bitcoin lane, and the gold lane is now moving fast. And they're going sideways or down in terms of gold. Bitcoin's going nowhere, and gold is going somewhere fast. And so I think a lot of those people who had given up on gold and decided to take a chance on Bitcoin, they're going to say, you know what? Bitcoin's not doing anything for me lately. It's not going anywhere. Gold is, gold stocks are. I'm going to get back into that trade, right? I think that's going to happen for a significant number of people who have invested in these crypto-related stocks. The problem is they can't get out, right? Because the money that came into these ETFs came in over years. It's going to try to come out in days. You're going to see some mass liquidations, and the market can't absorb it. We saw that on Friday. But what's coming is going to dwarf that. The selling that's going to come, if you get 10, 20% of the ETF money trying to come out in the same day, in the same week, look out, right? It's going to be a complete implosion of the market. And there is a lot of leverage in crypto. People think that we flushed out the leverage on Friday. Not even close. There is so much leverage that is yet to be flushed out that will hit in a much bigger decline. Because, Bitcoin, still stayed above 100,000. So we never really got to margin calls in Bitcoin. Maybe we flushed some people out of some altcoins, some shit coins or whatever. But the Bitcoin leverage is the big kahuna. And a lot of that is going to be flushed out. So I think we're dangerously close to a Bitcoin collapse because gold has pricked that bubble. Gold has shown that gold is the store of value. Gold is the anti-dollar trade, is the anti-fiat currency trade. If you're worried about dollar devaluation, budget deficits, trade deficits, gold is what you buy, not Bitcoin, because gold is going up, or silver. Not only is Bitcoin not digital gold, it's not even digital silver. It's digital nothing. So I think that any day you could see Bitcoin drop. I mean, right now it's at 111,000, so it's still hanging out above 100,000. I think holders are very complacent. What most Bitcoin people think is like, well, you know what? Bitcoin is going to catch up. Gold is the first mover. Bitcoin is going to follow gold and then surpass gold. We're just going to wait. It's going to happen, right? But when it doesn't happen, when it goes the other way instead, it's going to be mass liquidation. So again, if you're watching my podcast or my YouTube videos, if you have a lot of Bitcoin, sell. You don't even have to sell it all. I'm not telling you to sell everything, but sell something. And what you sell, buy gold, buy silver, go to Schiff Gold. I was one of the first companies to partner with BitPay. We make it very easy to take your Bitcoin, your fool's gold, and to go to Schiff Gold and use it to accumulate real gold and real silver that are going up. When gold hits 6,000, silver should be at least 75 if you're going to stay at 80 to 1, right? And silver's 53. That's a big move percentage-wise, even if you stay 80 to 1, which we won't. I think silver is going to close that gap, and so the gains are going to be even bigger. So if you want oversized gains, you can buy silver instead of gold. And if you want even bigger gains, you can sell your Bitcoin and you can invest in gold mining stocks. You can buy the Euro Pacific Gold Fund. You can have a separately managed account at Euro Pacific Asset Management, and we'll manage a portfolio of gold mining stocks. You've got much more upside potential in gold mining stocks than you have in Bitcoin and a lot less downside risk. Yes, these stocks can go down, but they ain't going to zero. Bitcoin can go to zero. And of course, look, even if it doesn't go to zero, even if there's always a bid because there's always some fanatics that are going to want Bitcoin, even if Bitcoin can hold 10,000, which I doubt, maybe 1,000, maybe it'll have a better chance of staying at 1,000. But even if it goes to 10,000, That's more than 90% down. So if you lose 90% of your money, it's almost like losing all your money, right? And of course, if Bitcoin goes to 1,000, then you've lost 99% of your money, and that's basically all your money. And so when that happens, look, most people are going to give up on Bitcoin, right? They would have been burned too badly to want to stick with it. So you have an opportunity to convert it into real gold. Take advantage of that opportunity while you can. Anyway, that's it for now. I got to get ready. I'm leaving early tomorrow morning on a jet plane. I'm going to Orlando. I'll see some of you at the Orlando Money Show. I got a 10:15 or 10:30 keynote. And then my workshop is, I think, 4 o'clock in the afternoon. So I'll be there. We're going to have a booth there. I'll be talking about gold. I'll be talking about silver. I was there last year, and I did the same thing. And so I'll be able to take a victory lap because I was probably the only person at the Money Show that was telling people to buy gold and silver and to buy mining stocks. And I'm going to be saying the same thing, only the stocks are a lot higher, but they should still be bought. Anyway, so I might do another update on Friday or Saturday on the Schiff Gold YouTube channel. In fact, my last video I did on Friday had over 80,000 views. That's the most I've gotten on the Schiff Gold Friday market wraps. So make sure you subscribe to that YouTube channel. We're up to about 30,000 subscribers. I'm still not quite at 600,000, inching higher. Again, try to subscribe if you're not a subscriber to the Peter Schiff channel. Subscribe. Tell your friends to subscribe. And while you're subscribing, go over to Schiff Sovereign and subscribe to our newsletter. In fact, we have a newsletter also, a paid one, Strategic Assets. We've been killing it with some of our small mining picks, not just in gold, but in other precious metals. We've had some really big winners over there. So check out not only the free newsletter, but the subscriber-based letter where we provide research for you into new ideas that you can incorporate into your own portfolios if you're a do-it-yourself investor. And again, all that information is available at schiffsovereign.com. Bye for now.